Hi there, this is Steve Miley, the market chartist on behalf of forextraders.com, and we're now going to take a look at the differing tones in here that we've looked at previously. A shift from both the Aussie and Kiwi dollar being positive versus the US dollar to now the New Zealand dollar being slightly more negative, whilst the Australian dollar continues to aim higher into late February, early March. Here we see the New Zealand dollar, however, so this push higher through January certainly neutralised bearish theme from November, December with a push above 72.39, but real reluctance in February to extend that gain to challenge 74.03, and only through that shoulder of this head and shoulders pattern would actually see a more bullish shift. And the setback we saw here at the RBNZ meeting earlier in February, and then a negative tone throughout the last week or two in here, certainly leaves a threat for late February and beyond into early March for deeper correction risk back down towards the psychological 70 level, maybe to the lower end of this range, back down towards 68, 67. That sits in contrast here if we look at the Australian dollar in here now. So the Australian dollar had that strong rally in here right the way through January, similarly neutralizing the Trumpflation trade, which was the November-December sell-off, but then continuing higher through late January into early February, and again a resilient consolidation this week and rebounding higher this week, really leaving threat for a challenge up to this 77-78 level, this November peak. And should we get above there, then it would certainly signal a more re-energized intermediate term bullish outlook. So upside threat for the Aussie dollar versus the US dollar, where a more negative consolidation theme for the New Zealand dollar, US dollar through late February into early March. This has been Steve Miley, the market chartist, on behalf of forextraders.com, and I wish you a great trading week.